Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Bitcoin. So it's currently Sunday and Bitcoin is setting up for an extremely important weekly candle body close right now. In this video, I want to focus on that weekly candle body close. What happens if we close beneath this critical zone, and then what will happen on Monday if we close at these levels? Will we create more price gaps? Can we expect more continuation, either up or down? Lower time frames, higher time frames? We'll discuss all of this and more. Let's dive into the higher time frames and talk about the close. So starting off on the total cryptocurrency market cap, as we discussed in our previous video, we're setting up a brutal rejection from the 618 Fibonacci right now. We reverted right back into this and got rejected extremely hard. You can currently see we're setting up a bearish engulfing candle on the total cryptocurrency market cap. This is the first bearish engulfing candle we've seen in absolutely ages. The last one is where we pivoted all the way back down to new lows. If we come over to Bitcoin, you can also see we have a nasty bearish engulfing candle right now on the weekly time frame. So why is this so important? Well, on this channel we've been discussing this big red zone of resistance that we're currently faced in. It's arguable where you want to draw this to. You could draw it up a little bit higher to encompass the wicks. You could draw it a little bit lower to these candle body closes. This is really just a approximate rough range, but what I want to highlight is a more specific range now that we've got a clear rejection. If we pull out this purple box, you can see these lows down here at 28,000 are extremely important. This is what held this entire structure up. Once we made the lows, we started making some higher lows over here. We came back into this range multiple times before finally losing it and heading down into new bear market lows. We've reverted back into this box, got rejected from a few of these wicks right here. And now we're setting up with a bearish engulfing candle on the weekly time frame. So things are really not looking too hot. We reverted right back into this range. Support, 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 support. Flip resistance with a bearish engulfing candle on pretty much all of the total market charts and also the Bitcoin chart. Now, like I said, this bearish engulfing candle, we've not seen one of these in absolutely ages. We have to go back all the way here to November, where we had an extremely brutal bearish engulfing candle, allowing us to get continuation down to new lows. Before then, we had a bearish engulfing candle here and got continuation. Before then, we had a bearish engulfing candle here and got continuation. Before then, bearish engulfing candle here. This actually marked the lows, so do bear in mind, it doesn't work 100% of the time, but we can back test further. Bearish engulfing candle, new lows and continuation. This wasn't a bearish engulfing. This wasn't bearish engulfing. Bearish engulfing candle, got continuation the next week. This wasn't bearish engulfing. This was bearish engulfing, mark the lows, doesn't always work out like I said. Bearish engulfing, continuation, bearish engulfing, continuation. Most of the time when we get these, we get brutal continuation, and considering how we've reverted right back into this resistance zone, it's not looking too good right now. That's the wrong momentum indicator I wanted to pull up. If we look at the stochastic right now, you can see as we've reverted into this, we're getting some pretty significant bearish crosses. So all in all, things are not looking good for Bitcoin, and this weekly candle body close is going to be a really important decisive factor. This wick down here at 28,000, this is really what was holding this entire structure up. We've reverted back into this box. If we close a weekly candle beneath 28,000, bear in mind we're currently sitting at 27,600 as I'm recording, then that may be the nail in the coffin, letting us know that we have more room to come to the downside to new bear market lows. So really keep your eyes on 28,000. If it comes to Monday morning and we're trading underneath 28,000, it's going to be absolutely curtains. Now, we talked about in previous videos, so I'm going to fly through this. What is the price target in the higher time frames? Well, you can see this next major zone is down here at 25,000, between 25.3 all the way down to 24.9. You can also see if we do come over to the CME gaps, this is associated with a CME gap down here at $24,870. That is the next major CME gap, or at least minor CME gap for us to focus on. I say major because from where the price is at this moment in time, this is about 10% drop, so pretty significant. Now, on this chart, you may be wondering why I've drawn the price from this dotted line up here, rather than where the price was last trading. Well, we're looking at the Bitcoin CME futures. As you can see, they closed last week at 27,285. We're actually going to talk about this chart and a potential new CME gap a little bit later later on in the video. We'll focus on in the higher time frames for right now, but like I said, higher time frames on this chart specifically, I do want to highlight there's a plethora of reasons why I think we're going to come down to 25,000, especially if we close underneath 28,000. Heading over to our next chart, we've been talking about this regular bearish divergence which has been playing out. Now you can draw this on so many different things. You can look at the MFI, the RSI, the OBV. As you can see, the price action has been making higher highs, higher highs, higher highs, higher highs, higher highs, and pretty much all the oscillators have been making lower highs. So I did just want to point out, I'm going to be using the OBV for this specific one because looking at the on-balance volume, as we've been discussing, we've been making lower highs in this market structure. Why have we been doing this? Well, in fact, when we were looking at the MFI, I believe the highs were back here. Yeah, they were all the way back down here, and you can see despite MFI topping out all the way back here, Bitcoin has been making higher highs, higher highs, higher highs, moving up 47% against the MFI, making this divergence. On the OBV, you can see we topped out round about here, and the price action's been making higher highs, and higher highs, and we've diverged 31% to the upside in this massive, massive bearish divergence. Now, as we discussed on the weekly time frame for Bitcoin, if we get rid of the OBV now, come back over here, you can see while this bearish divergence is playing out, we have this bearish engulfing candle. Now, this is different from all the previous rejections and retracements that we've had so far in this little capitulation phase. You can see, you know, when we had this correction over here, when we had this correction over here, when we had this correction over here, sure, they were pretty significant, but the price action was still showing strength in the immediate short term. We do have a brutal bearish engulfing candle right now and a brutal rejection taking place off this major, major zone, which is kind of letting me know that this bearish divergence, in my opinion, is finally starting to play out, and we may see a major, major retracement in the markets, with 25,000 obviously being that first price target to keep your eyes on. So while the OBV has been going down and the price action's been going up, why has this really been happening? How have we diverged 31% to the upside? How has the Bitcoin price gone on this massive, massive rally while the on-balance volume has been diminishing? Well, this all comes back to liquidity conditions. If we come over to the Bitcoin balances on exchanges, you can see liquidity's been pretty tight recently. We don't have that much liquidity on exchanges. We don't have, in other words, we don't have much balances on exchanges for Bitcoin. The markets are pretty illiquid right now, and because we don't have many Bitcoin on exchanges, it doesn't take too much movement to move the price action. So for example, if there's 21 million Bitcoin on exchanges, just a hypothetical, then it's going to take a lot of volume to move the price. If there's only 20 Bitcoin on exchanges, once again, another massive hypothetical, and someone comes and buys, you know, 2 or 3, 4, 5, maybe 10 Bitcoin, then the price is going to move absolutely insanely because there's not much Bitcoin on exchanges right now. So, you know, if you want to buy more, you have to bid up higher and higher and higher and higher because the markets are very illiquid. We're seeing a lack of liquidity in the markets right now. We're seeing liquidity in all different forms, OBV, MFI heading down, on-balance volume, Bitcoin balances on exchanges, they're all heading down in this very illiquid market environment. So it's not taking a plethora of volume to move the price action right now. I mean, we have had some decent volume candles on the weekly time frame, that is undeniable, but this rally that we're seeing right now is absolutely insane compared to the amount of volume that we currently have in the markets. This is why we're seeing this major divergence. And what is this rally really being driven by? Well, like I said, it's a lack of liquidity in the markets right now, and you pair this with the fact that retail traders are buying. They're celebrating this rally up to 28,000, but as you can see on this chart over here, they've been aping in the market since 40,000. Most traders are still heavily under the water. You know, even some, debatable whether you can say this is smart money, Michael Saylor is under the water right now since the most recent correction. Their average buy-in price is round about 29,800. So you've even got people like Michael Saylor beginning to become heavily under the water right now. And you may be thinking, you know, if his average buy-in price is, what is it, 29,800 and the price action is at 27,600, that may not be too much, but bear in mind, He owns a lot of Bitcoin. That is billions of dollars worth of losses right there. A lot of people are becoming under the water at this moment in time. And like I said, retail traders are what's propping this market up. They are rallying in due to a lack of liquidity. The markets are moving substantially because of this. It looks like we've also got some movement in whale wallets. Not too much. Like I said, I will keep you up to date when something significant happens. Really, this has been chopping to the side since the lows, but it looks like since this most recent rally up to 30,000 or so, you can see they have started to sell into the rally. If you're a veteran of the channel, you know we like to track smart money on all different types of scales. In fact, it was only yesterday we posted this video talking about how smart money is selling the S&P 500. In the S&P 500 in the stock market, dumb money is really interested in the markets right now. Smart money is selling to these people. In the Bitcoin markets, we've got retail traders buying, we've got smart money selling. In the corporate insider world, we also quite recently had a massive rally up in insider transaction ratio, identifying another top in the markets. If you keep up to date with the channel, you know we like to track all of these different aspects of the market. We like to follow what smart money's doing. We like to have insight to what corporate insiders are doing. These are people that have more insight to what's currently happening in the markets than ourselves, and these people are once again selling. So we've got smart money selling, corporate insiders are selling, and that is smart money for Bitcoin and the S&P 500 selling right now at this moment in time. So I'll keep you up to date. Like I said, not much movement here, but we are starting to see smart money exit while retail gets very excited. So there we go. That is really what to focus on in the higher time frames. If Bitcoin closes beneath 28,000 this week, it's going to be pretty ugly, and we're going to get lots of continuation back down. But what's going to happen on Monday? Let's talk about it. So if we dive into this chart over here, the Bitcoin CME futures, we of course discussed earlier about how 25,000 in my opinion is a magnet, but right now you may be looking at this chart, looking at these dotted lines right here and thinking, you know, what is drawing out on this chart right now? Well, let's talk about it. So while I'm recording this video, Bitcoin is trading at 27,650, and this is what this blue dotted line is over here on the Bitcoin CME futures. Down here on this close at 27,200 is where Bitcoin was last trading on the CME futures. So let's say, hypothetically, that Bitcoin closes beneath 28,000 on the weekly time frame. Let's say it closes right here at 27,600. That is going to be confirming the rejection in the higher time frames from this major zone over here. We'll get that continuation down to 27,000. But what is this also going to mean? It will mean that coming into Monday, when the markets open for the Chicago Mercantile Exchange, Bitcoin will be trading up here in the green where this dotted line is, and we will once again have a new CME gap down here where this blue line is. What is this going to mean? Well, we've been tracking on the channel recently how all of these CME gaps get filled. Over here, we had this CME gap quite recently fill at 28,145. If we break down and we close around about 27,600, really if we close this week above 27,300, we're going to have a new CME gap right down here at 27,300. The price is very likely to lollygag into, you know, the first couple of hours of the week, and then break down and fill this price gap. What's going to happen then? Well, the price on the CME futures literally closed at the lows down here. So we'll have a bearish engulfing candle on the weekly time frame, which is already a very good sign that we're going to get continuation to the downside in the next week. And we'll have a price gap to the downside, which will allow us to magnetize back down to these lows. And once we take out that price gap, we'll be making new lows, and we'll have that momentum for continuation all the way down to the next CME gap down here at 24,800. So this is really important. This weekly candle body close, like I said, beneath 28,000, we're going to be confirming a rejection. If we close above 27,300, we're going to have a new price gap. So either way, it's kind of like Bitcoin is in a lose-lose situation. If we close at 28K, we might be closing at resistance. Then we'll have a lot of room to move to the downside to the price gap. If we break to the downside over the weekend, you know, then Bitcoin can pump back up and fill this price gap round about, 27,300, at which point we would have made a new low. If we close at where we are now, we're going to have a price gap to fill, making us come down to these new lows. It's really a lose-lose situation with this 28,000 zone and this new CME price gap. So I think Bitcoin is going to come to the downside, fill the price gap on Monday at 27,300, and we'll get that continuation back down. In terms of what's happening in the immediate short term, on the 1 hour time frame, like we discussed in our previous video on Friday, the next big Bitcoin move is here. We're of course predicting a major move for Bitcoin to happen right now, but we did say over the weekend it's very likely that we kind of just chop to the side, and that is exactly what we've done. You can see we have temporarily broken out of this descending channel, but we are finding ourselves at resistance on the 1 hour EMA ribbons right now. I also think if we come over to the 4 hour time, oh no, it's on the daily time frame. If we come over to the daily time frame, it is kind of looking a tiny bit like we could be forming a bear flag at this moment in time. I really am not the biggest fan of how this one looks on the 4 hour time frame, on the 1 hour time frame. I do think it looks pretty ugly. So I'm personally not really looking at this as a picture perfect bear flag, although what I am seeing is kind of the same thing as a bear flag. In a bear flag, you have a massive drop to the downside, then you kind of just consolidate before you break back down. This is really what I see us doing. I kind of just see us stepping to the downside, making, if we come over to the 1 hour time frame, you can see, we had this top, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and we just keep on making lower lows, lower highs. I think we're just kind of chopping to the sideways over the weekend. Lower high here, lower high here. We've been triple rejected on the 1 hour EMA ribbons, and as we're kind of consolidating, coiling up into that Monday opening, I think we're going to come down, fill that price gap, and come all the way for 25,000. Now, wrapping up this video, something else that will help us break to the downside is what's happening in the stock market. Like we talked about, smart money is selling the S&P 500 right now. Dumb money is interested in the S&P 500 right now. Corporate insiders are selling their stocks and securities in the S&P 500 right now. We've also got this Elliott wave count on the S&P 500 rallying us right back up to this resistance at this moment in time. In the higher time frames, you can see we've had a 5 wave into a 5 wave symmetrical triangle. This is a bearish continuation in a falling market. We've just topped out at wave A, B, C, D, E. This should be meaning that we should move back down to the downside. And in the lower time frames, what I find really interesting about this is this. If we look at what's happening, we'll count it on the daily. You can see we had a ABC correction up in this market structure up to wave A. This was B, C, D, E. You can see wave A topped out here on the stochastic RSI. So we had an A, B, C correction, stochastic RSI topped out. We had a 5 wave to the downside, stochastic RSI bottomed. We had a B, C correction. We topped out on the stochastic RSI with a double top on wave C. So you can see wave C's top out on the stochastic. We had a 5 wave correction back down, stochastic flip bullish, had a 5 wave correction back down, stochastic flip bullish. And now, if we look, you can see this individual wave count. We've had a ABC correction, a little bit easier to see on the weekly. A, B, C, back to the upside, and this C wave, in my opinion, is going to be calling break to the downside. We've got corporate insiders selling into this. We've got smart money selling into this. We've got resistance at this overhead level right now. The Elliott wave count is saying we're topping out. The stochastic RSI is also saying we're topping out. So with this, I think we're going to break down coming into Monday for the S&P 500. You can see that we did have a slight sell of volatility coming into Friday. We did have a slight buyback in the markets. Typically what happens at the end of the trading week for the S&P 500 is traders sell that volatility, the market rallies into Sunday, and traders buy back those volatility contracts coming into Monday. With that being said, on the S&P 500 on multiple fronts, we're not looking too hot right now. We're running into some major areas of resistance, and with corporate insiders and smart money selling into this rally, I think it's pretty clear that the S&P 500 is about to top out. In fact, the S&P 500 hasn't been breaking down too much for the past few weeks. If we look at it, you can still see that it's holding up quite well, but we have leading indicators of the S&P 500 like the iShares TIP ETF. If you're a veteran of the channel, you know that we looked at the iShares TIP ETF and we were calling for new bear market lows following new bear market lows in the iShares TIP ETF. It took another 1, 2, 3, 4 weeks for the S&P 500 to catch up because the iShares TIP ETF, the Treasury inflationary protected securities, are leading indicators for the rest of the market. They're leading indicators for the S&P 500. The S&P 500 is a leading indicator for Bitcoin. And right now, the iShares TIP ETF has been breaking down since it topped out in early April. So we've had about the past 1, 2, 3 weeks or so of the iShares TIP ETF breaking down. The S&P 500 has only put in a red candle on this week. So the S&P 500 should break down next week following the iShares TIP ETF. And with all this said, ladies and gentlemen, if Bitcoin closes beneath 28,000, we're going to have that bearish engulfing candle. We're going to get that continuation. We're going to have that CME price gap to fill at 27,300, at which point we'll break down into new lows on the daily time frame. We'll get continuation down to 25. That's really what I wanted to talk about today, my friends. So for today, that's all I've got. Keep your eyes on 28,000 over the weekend. I know this was a longer video than normal, but this weekly candle body close with all of these major rejections, bearish engulfing candles, I really wanted to run through all of this just to give you a heads up on what to expect for next week. So for today, my friends, that's all I've got. As always, if you do enjoy my content, let me know down below by leaving a like and a comment. Share the videos with your friends. If you want to further support the channel, feel free to click the join button and become a member today. Make sure to follow me over on Twitter at 618_cowboy. But yeah, I'll leave it here. It's been your boy Cowboy Trades. I'm out, my friends. Peace.